So Bryson and Michael, thank you for having us this morning for our visit. This is kind of a different experience for us, but I'm guessing you guys do an awful lot with video conference and video chat. Is that right?
We do a fair amount pre-corona, and we're doing a lot more now post-corona.
I'll bet you are. Yeah, pre and post-corona, those are terms we're going to hear an awful lot in the coming years, I'll bet. Well, let's go ahead and try to respect your time at the very least. Let's go ahead and begin. We probably will have a couple of other people join us. We're short a couple at the moment. But for the most part, I think our more serious players are here. So again, thank you for having us. Bryson, I've got this set up so that either you or Michael can share the screen if you'd like, or we can just see you on the view that we've got right now. But we have Logan Scala and Scalca rather, Kira Cower, Grissom Puneta, John Carr, Britton Woodward, whom I think you might know, Alex DeBry, Jacob Taylor, and Patrick Tilley has just joined us. We can barely see his face there because of the backlighting. And so, again, thank you for having us spend some time with you today. For those of you that don't know Economic Partners all that well, it's arguably the strongest, most progressive of the valuation consultancies in the region. I believe that it's been about a year ago since you were purchased by Ryan. Is that correct?
Mm-hmm. That's right. Yeah, November of 2018, so a little over a year.
Wow. And Ryan, for those of you that don't know them, is a large, very well-respected consulting firm internationally. Bryson is one of the principals. I always think of Bryson as the managing director, but I don't know what title you use, Bryson, or is that one, will that do?
But that's just fine, yeah. Principal is the name, the titles we use, and I'm one of two principals in our office in Pleasant Grove.
Very good. And then some of you realize that Michael is a Westminster finance grad and has worked with Economic Partners, he and Kuchata Bunareth, for the last year or so. So with that, I'd like to turn the time over to you, Bryson, and again, thank you for spending time with us.
Very good. Well, great to meet everybody, and everybody looks sharp with their shirts and ties and jackets. Look a good-looking bunch. Dr. Haskell, maybe I want to get a little bit of feedback. Michael and I have prepared a couple of things, and we could go on and wax lyrical for hours on end. But to make good use of the hour we have scheduled, we thought we would do a brief firm introduction, not take a lot of time, but just do you did a high-level view, maybe go a little bit deeper so you have some context. And then last year, I think we talked about multiples and how to think about selecting an adequate multiple in our valuation work. You mentioned, Dr. Haskell, potentially cap tables. And so I've done some training on capitalization tables and ownership tables, and I think it's pretty rewarding. But if you've already done that in your classroom work, then that might be a little repetitive. And then also maybe...
Bryson, we have spent some time on cap tables. We've spent time on multiples as well, but let's be very honest with each other. We're approaching these from a very academic standpoint, whereas you have practical and applied knowledge, the likes of which I'm just not able to capture nor share with them. So don't hesitate to talk about your utility of cap tables and some of the things that you think might be valuable there. But even before that, we've got to get something straight very quickly. You referred to me as Professor Haskell a few minutes ago, and now Dr. Haskell, and everybody else is wondering who on earth you're talking to, because they just know me as Rick. So we can get rid of the titles because they're trying to figure out who on earth is in this discussion with us.
All right, fair enough. Okay. Very good then. Well, let's proceed like that. And then Michael also has some commentary on a little bit of a day in the life as an analyst at our firm, so it gives you some real world feeling of what it would be like working for Economics Partners and some of the responsibilities he has. So maybe we'll spend some time, let's do our firm overview, a little bit of a day in the life, and then Michael, maybe you can jump in your multiples, and I'll conclude with cap table. Does that work?
Yeah, that works for me. And also maybe for everybody to turn on mute, as sometimes there's background noise and whatever, so everybody can hear. And then unless you have a question, maybe unmute.
Perfect. And I want this to be interactive, so feel free to jump in. You know, you need to cut people off when you're video conferencing because, you know, you can't wait to raise your hand. And if I'm sharing my screen and I only see my presentation, I can't see hands. So maybe, Rick, if you want to allow me to share my screen, which I believe I can, I'm going to pull up our introductory presentation and give you a little bit more background on who we are so you can get a flavor of our business. Here is our firm, Economics Partners, at a glance. I bought Greener Equity, which was founded in 2006, and I bought it with my current partner, Trent, 6 years ago in 2014. And then Economics Partners was founded in 2011. We combined Economics Partners and Greener Equity in 2017. Economics Partners is a group of transfer pricing and economists. Transfer pricing is intercompany transactions. So think about Apple owns manufacturing in China. They own stores and distribution in the United States. The legal entity in China needs to recognize profits in China to remit to the tax authorities because the tax authorities in China want that remittance. And so Apple has to sell those phones to the U.S. legal entity. Well, what price do they sell those at? And it needs to be at an arm's length standard so the tax authorities in China are comfortable with the amount that's remitted to them, and the amount remitted to the U.S. tax authorities are comfortable with the profits recognized in the U.S. That is called transfer pricing, is the intercompany transactions, transferring the price between commonly owned legal entities. And so that's what Economics Partners specializes in. So we joined forces with them in 2017, and as Rick mentioned, in 2018, or as he brought up, Ryan, which is a large international tax firm, bought all of Economics Partners in November of 2018. In our Salt Lake City / Pleasant Grove office, there are roughly, call it 17 professionals. We have 13 analysts, 2 support staff, 2 partners. We have a team in Denver and a team in Washington, D.C. Let me jump to this slide, which is events that may necessitate evaluation. Evaluation is used in many different contexts, and I know that's the lens which in your advanced finance courses you're using to think about a lot of your financial decisions. Creating value for shareholders. You think about value in the sense for tax reporting, as we just talked about with transfer pricing. There's value considerations on managing and planning one's estate for inheritance reasons, for gifting and charitable contribution reasons. There may be value assigned to certain securities and assets. There is deferred compensation with all these high technology companies along the Wasatch Front that want to incentivize their employees through stock option programs or restricted stock grants. There's value considerations on what the strike prices of those stock options are or what the tax basis is of those stock grants. There are corporate restructurings and corporate conversions. You know, you convert from a legal structure of an LLC, a limited liability company, and you convert to a C corporation. Well, there has to be a value of those assets and or the equity in order to report to tax authorities, spinning out assets. So there's a whole bunch of tax codes or sections of the U.S. tax code and sections of international tax regulations that may necessitate a valuation or need for our services. The second bucket we use is financial reporting. You think about all the accounting standards, codification requirements to produce, you know, financial statements that comply with United States generally accepted accounting principles. There are international financial reporting standards as well. Most of the U.S. GAAP and IFRS converge on similar methodologies, but not always. And so there's valuing the assets and assigning the purchase price of an acquisition and allocating that purchase price to the various asset classes. So you think about real estate and inventory. Well, what about software? How do you value and put that line item on your balance sheet of software you just acquired? What about customer relationships and customer contracts? What about your employment agreements and non-competition agreements and your brand? And so there are these things you can value those assets on your balance sheet, and the residual goes to goodwill. So we perform a lot of purchase price allocations. Well, what's happening also right now, you have impairment tests through accounting standards codification. If the actual value of the underlying asset is impaired and below what it is on your books, then you may need to write that down. You may need to value certain derivatives or other securities and fair value those instruments on your balance sheet. And so there's a whole bunch of accounting requirements that may have a need for our services, in which you may also want to employ different valuation methodologies. And the last one, which is what most people are familiar with, are situational or strategic in nature. I want to buy a business or sell a business. What is that business worth? I want to, my partner and I are splitting up, and we want to split the assets, and he or she wants to remain with the business while I want to move on to something else. What is that worth? Maybe there's a management buyout, or I know there's a leverage buyout. You have gone through LBO situations. And so there's situational and strategic reasons of why, of employing valuation tools to come up with a valuation opinion. So let me pause there. Are there any thoughts or questions thus far on my soliloquy? Can you see my screen too? I guess I should have brought that up. I see a lot of heads, yes. Thoughts, questions, concerns?
Yeah, I've got one for you real quick, Bryson. What, in aspect to the tax reporting, the financial fiduciary reporting, and the situational needs, which area do you feel like you guys deal with the most, or do you feel like you bounce around pretty well from sector to sector in that subdivision?
Yep. Yeah. Our revenue allocation is probably 50% tax, 25% financial reporting, and 25% strategic. The majority of our work is in the tax vein, which is interesting. I'm a CPA, so I went through accounting, took a CPA exam, and almost all of my training was around financial reporting. And there's this whole other world of tax reporting that is actually very, very large market, very robust. And many of the companies in America do not produce audited financial statements. And so and every audited company has tax reporting requirements. So every company in America has tax reporting needs. And so that's clearly the largest market in America, and I would argue the world. And so that's where we generally see most of our work, in the tax vein. Okay. Let me move on. We divide our world into valuation services, consulting services. I'm not going to go through this slide, but you can look that we help, determine different strategic alternatives to provide diligent support. And most of this is in conjunction with a transaction and M&A event. And then obviously we talked on transfer pricing. We do some transfer pricing out of our office in Utah. Most of the transfer pricing work is done out of Washington, D.C. or Denver, setting up intercompany structures and planning, complying and producing the evaluation reports and the valuation support. And then when tax authorities may dispute or challenge the assumptions and the compliance, there's obviously defense situations where corporations will engage our services, either defend or we have even been retained by the IRS to help litigate against other taxpayers. Here are some of our clients to give you a flavor of some of the companies we work with. Some well-known brands like HP, Dell, Siemens, and some fun ones like TuneIn. Jive is a local company. We did work for Jive. Mission Belt is a local company. stance is out of Southern California. And so just to give you a flavor that we cover, healthcare, Gardant, biotech, cellularity, to technology, hardware, HP and Dell, to consumer products. We provide services in many different industries. Our work's been, audited by the large accounting firms, and large law firms also have confidence in who we are. Bios, leadership, and then there's some case studies here on various situations. And so I can send this presentation to Rick, and he can circulate it to the team. Our parent company, as we talked about earlier, is a large tax firm. Anything tax related, Ryan is the name of the firm. Ryan handles anything from income tax, there's property tax, sales tax, business license tax, human capital and payroll. It's a 2,500 person firm. We economics partners make up about 70 professionals, and so we're definitely a small subsidiary in a very large firm. Nevertheless, we're growing quickly, and you can leverage the skills and expertise of our tax partners. And here's a view of where our offices are located, or Ryan's offices are located throughout the country, and primarily concentrated in North America, United States and Canada, but also you can see our offices in Europe and in Asia Pacific.
Bryson, you referenced human capital tax just a moment ago. And that's not a term that I've heard. Obviously, I'm familiar with human capital, of course. So what would be an example of human capital tax?
Yeah, this is a little bit outside my world. I know there are payroll, primarily around payroll.
Okay.
And there may be a simple use case for this would be in an acquisition scenario where a firm may acquire another firm in the second quarter of the year, in Q2, or even in Q3, and say the highly compensated individuals have already met the threshold of their Social Security tax limits. And so I believe that's, if they're paid over, I believe it's $140,000 a year, $120,000 a year, no longer does the company nor the employee have to remit Social Security taxes, because that's up to a certain threshold amount. In an acquisition scenario, for some reason, just through payroll tracking, that may go back to zero in June, and then from June to, December, they are remitting and double paying the Social Security tax. Well, you and I, at the end of the year, perform personal tax filings, and that is all equaled out, whereas the corporation may not capture that or recognize they double paid on those highly compensated employees, and may never file a return to recoup those funds because of the double legal entities were paying that, when really it should have been one legal entity paying that. Ryan will go in and help companies refund those human capital taxes.
Very good, thank you.
That's one example. That's one example of a human capital tax issue that we help with. Okay. Any other questions?